Okay, so welcome back traders. Here we have a very quick video on the S&P 500, or this is the SPX 500, right? And we're going to be going over a quick price action review as to how you could have entered a particular position here on Monday. So the key thing to understand from a higher time frame perspective is that we're in a zone over here where we've had price break structure to the upside. So we've seen structure break to the upside. So we're in this position now. We're above an old high. We're in all-time high territory, and we see price printing an all-time high in this region. So we're above an old high, right? So we're above an old high. So what does this tell us when it comes from a smart money concept perspective, or just a general trading perspective? When we break a high, so if I take this to the left for a second, when we break a high, we can expect price to give a retracement before heading higher, right? So we look to sell above old highs. We look to sell from this region, right? And that's what we're doing here. We want to sell above the old high, and this is what we're going to break down on the lower time frame. So if I now head down, jump down to the M15 time frame, we're going to go back to Monday of this week, and we're going to begin to dissect a trade, right? But let's start from Friday, last Friday. So this is being recorded on the 28th of February. We're going to be dissecting price from the Friday beforehand. So what we saw on Friday is we saw a rally up, creating this high over here. So this is sort of the all-time high we're dealing with at the moment. So this is an ATH, or all-time high. And what we've seen over here is we've seen price give us a break of minor structure to the left. So this is here, this is our CHoCH, or our change of character. This is our change of character, or our CHoCH. And from here we understand there's been a shift in the overall momentum from buying to selling, just in this region. Now we've seen price head up, giving a minor bullish retracement before heading lower, right? So in line with our narrative of looking for sells, here's how we could have got involved in this potential trade. So we've had the CHoCH to the left. Now we begin to dissect how price behaved on Monday, the 26th of February. So what we had over here is we had an Asian range. Now the Asian range, as we know, accumulates price. So as the Asian range began to come to an end, what do we see in price? We see price giving very minor structure to the upside. So what we see is price moving like this, just in line with the live price action on the day. We see price giving higher highs and higher lows. Okay, now it's important to understand that this wick here at 2:30 was 2:30 UK time, was essentially 9:30 Eastern Standard Time. So this is when SPY opens up, right? This is when SPY opens, right? So from here we look to see how the volatility in the first 2 hours of the New York AM session begins to present us with a trade, right? So specifically what we're looking for is we're looking for a shift in our market structure to the downside, in line with looking for sells, and we're looking for a fair value gap. So do we get that? The question is yes. So here's how we mark out our CHoCH. This is our change of character, right? So this is our change of character for the day. So we had our initial M15 change of character over here. This is our CHoCH for the day, so we look for a CHoCH on the day. This could be an M5 break of structure, but we're not going to go on the lower time frames. We see a shift in market structure from up to down, and we are simply entering off the CHoCH fair value gap. So here's our CHoCH in this region. So when we have a change of character, what we are essentially looking for is we're looking for a fair value gap to enter off. Now we have very specific times that we look for the fair value gap. Now, if I were to zoom in to the screen, we want to be able to identify we have a fair value gap candle just over here. So this is our fair value gap candle over here. So what does this fair value gap candle tell us? Well, it tells us there's been a disproportionate amount of buying than selling, right? So we see sellers in control, and it's given us that fair value gap. Now, the most important thing when it comes to fair value gap is time. What times are we looking for the fair value gap? Now the time specifically is from 9:30 to 11 a.m. right? 9:30 to 11 a.m. Eastern Standard Time. So that's very important to understand when it comes to looking for fair value gaps, right? So we have a fair value gap over here. So very simply from here we enter off the fair value gap, okay? So for those who are wondering, we enter off the fair value gap, right? So we want to have our entry over here. A safe place to put your stop loss was either above the high of the day, but you can have it slightly lower because there's no fair value gaps in this region. So when there's no fair value gaps in this region, you know your stop loss is safe over here, right? So you want to have a safe stop loss. Typically, near the Judas swing, right? And the Judas swing is the high of the day, right? So we have the Judas swing that gets printed over here in yellow. If I quickly label that in, the yellow box represents the high of the day of the Judas swing. And after we've had a CHoCH, a change of character, we look to enter short. And this rally down. So first we want to target the Asian high to the left for a 1-to-1. But price very quickly delivers us a nice 1 to 2 hour trade. And it was a swing that did hold all the way down 1 to 2, 1 to 3. But this is a very quick overview of how you can enter on SPY, right? So this is a market that I trade a lot. But these same skills in the market can be transferred across the following markets, right? You can use this on the S&P 500, you can use this on the NASDAQ or NAS 100, and you can use it on US 30. So understanding basics of Asian range liquidity, basic structural principles and fair value gaps, along with time, will allow you to excel your trading from an ICT perspective.